Good afternoon, everyone. This is John O'Hare from O'Hare Wealth Management with our weekly update. As you know, this is recorded one day before, so you're seeing it on Thursday. We're recording on Wednesday. I only have, update here. We're going to be closed Monday for Memorial Day. I want to remind everybody that if you call, there'll be nobody here to answer your questions, but we will get back to you on Tuesday. If you have questions about the market, please send them to us or call us and let us know. Probably won't answer them today because it's pre-recorded, but we can get to them next week for you. And we're always interested in what our clients are thinking. Question of the week. We have one this week, and it's the big question hanging out there. In fact, I already got 2 phone calls this morning on this before I did the call. The U.S. debt was downgraded this week by Moody's. And the question is, what does the downgrade of the U.S. debt mean for the stock market and bond market outlook for O'Hare Wealth Management? And I would tell you, it's not a good thing that the U.S. debt is downgraded, but from a near-term perspective, it's pretty much meaningless. It's really a long-term warning that the debt could be unsustainable. When I say long-term, I'm talking about 10 to 20 years. So this is a flag that you look back 10 years from now and say, geez, they downgraded the debt way back in 2025 and now it's 2035 and the government is in a pickle. Their cost of capital is going up and they're raising taxes. That's what this means long term. Short term, it means much of nothing in our outlook for the stock and bond market. And I want to put this in perspective too, because I've been in the business for 40 plus years. The 10-year Treasury, which is the benchmark everybody looks at, the U.S. 10-year Treasury bond today has a yield of 4.5, so 4.5%. Most of my career in the business, the yield on the 10-year Treasury has been above 6%. During all of the 1990s, which was a great economy and a very good stock market, the 10-year Treasury was above 5.5%, 6%. So looking very long term, 4.5% is very reasonable cost for debt on a long term basis for the 10-year Treasury. So this isn't something that is going to crash and burn our government today. Now, you could argue if you didn't have the downgrade of their debt, could we be paying 4.25 instead of 4.5? Possibly, but even 4.25, that's not going to be that big a change of what the government does and what they spend. The other thing that's important here is that the government bond market, we call it the sovereign debt, so the country's debt. When you look at it worldwide, we still have the most attractive rates for our 10-year bonds. So if you look at developed markets, like in Europe, like Spain or Italy, those are two countries that pay much less than we do. I think Spain pays 3.25 versus our 4.5. And Italy, I think, pays a little over 3.5 versus our 4.5. These are both countries that had tremendous problems 13, 14 years ago with the European debt crisis. And they're paying less than we are. So competitively, the U.S. bond rates are still very competitive. I think Great Britain might be the only developed country that is paying slightly more on their 10-year Treasury debt than we are. So there isn't going to be a run on the dollar. There's going to be a run on our debt. Again, long term, this is an issue. Short term, it's not going to cause a lot of problems. We do have a video out on our book. This is our book for May and June, 5 Types of Wealth. I just read it. Good read, easy read. I would recommend it for everyone. We all think of wealth as money, but your health is a type of wealth. Your friendships, a type of wealth. Family's a type of wealth. Mental health is a type of wealth. Age is a type of wealth. You know, a lot of us would like to be younger and trade places with 30-year-olds. But this puts a lot of this in perspective, and you should be focusing on all 5 types of wealth, not just accumulating financial wealth. Good book. definitely read it. Look for our video on there. I think Jerry Jones did that one. Thanks for joining us today. I hope you have a great Memorial Day, and thank the veterans out there that have served us. We do appreciate that. My mother and father were both veterans of World War II. My wife's father was a veteran, actually was on Omaha Beach on D-Day. So we're familiar with the sacrifices that the veterans have made for us. So again, if you could do something nice for a veteran this weekend, please do that. Otherwise, thank you for your attendance today, and we will see you soon. Oh, lastly, we did put out a reminder for our clay shoot next month in June. It's June 17th. It's our 12th year raising money for multiple sclerosis, MS, and we look forward to seeing you there. If you haven't gotten an invite, shoot us an email or give us a call. We'll get you one. Thanks, everyone.